Hi, everyone. Paul Krugman back on my usual schedule of recording interviews. And today I'm talking with Azeem Azhar, who I spoke to in January 2025, basically centuries ago in AI time. And with AI on everybody's mind, I thought it would be good to revisit, talk about some of the basics, then talk about, where we are now in this whole incredible story. So, hi, welcome to another conversation.
Yeah, thank you, Paul. And it has been 18 months, also known as 1.5 centuries in AI time since we spoke.
Yeah. Yeah. Well, I should say, Azim is an independent researcher, founder of Exponential View, which is both, among other things, has a extremely valuable Substack and one of the top tech Substacks out there. So anyway, so hopefully can cure some of my ignorance here. Let me ask with the sort of dumbest question. What is this thing called AI? How does it do what it does? I mean, even skeptics have to admit that it's really impressive how it's sort of leapt over all of the previous barriers. How is this happening?
I think we're still figuring it out. I think of AI ultimately as a machine that does things. And how's it been built? It's been built by parsing first millions, then billions, then tens of billions, hundreds of billions of trillions of words of human output through a neural network to give it some sense of how we have thought about the world. And because it operates at dimensions well beyond the four of space and time, it seems to be able to find relationships between quite complex concepts. And I think we've all had that experience, whether we've been using Chat GPT or Claude over the last 2 or 3 years, that it seems to be able to recognize things that are quite deeply related that don't immediately spring to mind. And in recent years, and last year and a half or so, the labs have started to train the AI models not just on words in books, but actually on tasks, on what is the set of things that you do to write a piece of code that does something? What is a set of
Right.
things you do to use a piece of software in an enterprise? And try to train those models on those particular tasks. Essentially, it's aping what we do, and they use various mathematical tools like reinforcement learning, where the model notionally gets a reward. Of course, it's not a reward the way you and I think of it, because
Right.
it's a machine. If it gets things right, and that's what it is. It's sort of reflecting back, but also I think discovering some really deep relationships in the world that we might not, prima facie as humans spot.
Okay. I mean, it's pretty. I guess Brad DeLong calls it a vast stew of linear algebra, which I guess is
Hmm.
kind of right, but
That's basically it. Yeah.
it makes some sense to me because I think that PageRank with Google was the last thing I actually understood. And that's
Hmm.
that's the eigenvector with the largest eigenvalue. Not that anybody needs to know that, but this is somehow like a 1,000 times or million times bigger version of this, right? So okay, yeah, it's pretty, but it's not at all what people used to imagine you would do. It's not what artificial intelligence was supposed to be, right?
No,
It's
not at all. I mean, if you go back, I sometimes go back and look at the TV series of the 70s that I grew up with as a child, and they'll always have an AI in the spaceship. Space 1999 had an AI you could talk to, and it was very precise, it was very clipped, and it did things and got things right. And there was a sense that you could trust it. But you'd never think to say, as I sometimes do, find me 5 analogies to make
right.
this point, right? As a brainstorming partner, or I give it tracts of my book, the book that I'm writing, and say, how would Paul Krugman criticize this argument? And I get suggestions that I then work through by hand. I don't think we really imagined it would look like that.
Yeah, and you're right. In sci-fi, it would talk in a monotone and would be relentlessly logical. And in fact, the models are unpredictable. They're sometimes need to be temperamental. They're not
Mm.
reliable. That's one of the big problems is that so it's sort of it's wild. It's not at all what we imagined.
It's not at all. And this point about reliability is so complex. I found that a couple of months back, one of the versions of Anthropic's Claude came out, and I found it so sycophantic that it became unhelpful, because I like these things to help me on hard problems and to challenge me. So I switched back to Chat GPT, which has always been a little bit more, maybe a bit less friendly. And what's going on there, Paul, is that because we don't really have a good theory about how to build these, they are developed almost like on a petri dish and nudged in particular directions, so they take the shape that we expect them to take. And to use an economist term, they improve non-monotonically with every release. So you'll see the latest release of an anthropic model, and the way we figure out how good a model is there are maybe 20 or 30 public benchmarks that they're measured against, like how well do they summarize text and how well do they write software code. And the next version of the model won't necessarily be better at everything than the previous version, because you lose something in order to get it. And that's the complexity that the labs are wrestling with.
Wow. Okay. Yeah. I don't think there's any historical parallel to that, to a technology that you really don't understand and that you really aren't fully in control of. Wow. All right. Second naive question. So I'm actually, I don't think I'm a Luddite. I'm not, I've always been happy to adopt technologies, but I'm also not a hobbyist, or I'm not, maybe incurious on some of these things. I tend to pick up technologies, but also things like mathematical techniques as needed because I see something to do. And I'm feeling kind of inadequate because I keep on not finding anything to do with the more elaborate. I'm using Notebook LM to extract tables from PDFs, that sort of thing. But what should I be doing? What would I do have friends who are using Claude a lot, but I can't quite figure out what particularly agentic AI should be doing for me.
Yeah, I'm really sympathetic to that because I have the same issue. These tools have been developed by software developers in a really particular part of the world, which is Silicon Valley, where the culture really revolves around the art of the programmer. And so if you have a programmer's day and you think in coding terms and you have programming workflows, it becomes really obvious what you do with a really advanced AI tool. I think in the world that I occupy, which is, I do a lot of research, some of it's qualitative, some of it's quantitative, those workflows don't match with the way that I think through problems. And so I do absolutely feel with what you say. I mean, the way that I get around this is that I do look at things on Twitter, or X as it's called, because people are sharing tips. And I often just ask the model, what could I do with you, given that I'm trying to do this thing, I'm trying to solve this problem? And that will come back and give me a suggestion. I have had some success with agents. So I have an agent called R Mini Arnold. So R is a pie into Isaac Asimov's robots. They're all called R. Arnold is after the good Terminator in Terminator 2, played by Arnold Schwarzenegger, who protects humanity. And R Mini Arnold is available on my WhatsApp, and it's available on email. And it has access to a whole set of resources. It can browse the web, it can access LinkedIn, it can access Twitter, it can look at my library of PDFs of research that I've built or downloaded. And I can throw tasks to it a little bit like, I would say, a pretty decent but slightly temperamental graduate student. So sometimes it just disappears for 6 or 7 hours at a time. And one of the differences between using an agent like that and using Claude is that R Mini Arnold has a lot of my life's context. So it knows the music I like, it knows the book I'm working on, it knows the investments I'm making, it knows the essays I'm doing, it's got the calendar of speeches that I'm about to give. And so when it goes off and does a task, it tries to figure out, what in my world is this going to be relevant to, and where can I draw threads from? And when it works, it is really sublime, and it does feel a little bit like science fiction. But I would say it's incredibly brittle. I mean, there's breaks every 4 or 5 days.
So what would a task be? I mean, what might you ask it to do?
So a good example was I was thinking about the Devine and Paul David research about why electrification took the time it took. And I wanted to understand what were the determinants of that 35-year lag from Pearl Street generation to productivity growth. From the perspective of a model, right? What could the levers be? And so I threw that into R Mini Arnold, and it set up a team of sub-agents which had personalities of key economists and was able to go off and do research the way the AIs do, but also research on all the academic papers that I have downloaded in the past. So I have access to JSTOR. I'm allowed to download, 100 PDFs a month. It can look at all of those and start to compile an answer in a way that perhaps a Chat GPT can't. And it knows the context of my book, and it knows the context of the essay I wrote. So what then comes back is something a little bit more structured that I can then play with. It's a marginal improvement on doing this on Chat GPT. I'm sure you could probably figure out how to do it, but it's quick. I use my iPhone. I often do this when I'm walking through the airport and I think I want to solve this and have this result when I'm sitting on the plane, and I will fire that query out, and it goes back and goes out and sorts that out for me.
Okay. Yeah. All right. I guess I'm getting it. Okay. Now my question on that is still on very basic stuff. So obviously you and I are not typical, are not the market. The people who are going to use this are going to be middle managers, independent business people. I guess, in some way, both of us are kind of independent business people, but not typical ones. And I find myself, when I hear that, lots of people are piling into that, I find myself thinking about what I think of as the homemade pasta problem. So you're probably too young for this, but there was a time when I was young and we were using stone axes for computing, when there was a big fad of making your own pasta. Little pasta machines were everywhere. And then at a certain point, it was kind of a collective, what the hell are we doing? Store-bought pasta is actually better. The Italians don't do this. And I have to think that for most, the range of tasks, the range of agents in effect that's independent business people want can't be that wide. People aren't that different. And that why aren't there sort of off the rack, off the shelf? What won't there just be agents being sold? Why would people be vibe coding? Why wouldn't they just take one of these off the shelf things? Is that my
Yeah, I think it's different for an independent person or a small business to a middle manager in a big company. I would imagine that you will start to see people selling specific, agents that solve your marketing problem. If you're a barber's shop and you've got 4 chairs and you have maybe 30 people a day coming through. It doesn't, right now what you do is you go to Chat GPT and you help it write your collateral for your website. That feels like it's an interim step to somebody delivering the actual finished product. Why haven't we seen it? I think we haven't seen it yet because the terrain is still big enough. So all the companies who are, they're not the Anthropics and the OpenAIs, but there's a lot of other companies building agents that are these end-to-end workflows for businesses. They still believe that the prize for them is to build the generic platform that is the tool for all tools. Because if you get that right, you have a much, much bigger business than if you're just a vertical application. And I think we're only, a year or two into these entrepreneurs building these businesses. I think as some of them succeed and some fail, the ones that are not able to succeed in the general space will start to verticalize, which is what we saw, we've seen in the internet, we saw in software as well. But I think within a big company, it's a different set of questions because you have far fewer degrees of freedom as a marketing manager in a large company than you do if you own your own barber's shop, because you have all these rules, you have all these other teams you have to interface with, you are held to the priorities and the plans of the company as a whole. And in that instance, I think it's much, much harder to see how do you use AI to really, really change the way you work.
Yeah, I mean, again, we're talking about ancient history here, but everybody still uses Excel, even though it has always been horrible. But they're, the constraints of corporate life mean that sort of everybody has to use Excel. So that means again that we might, I don't know, maybe we'll see quite a lot less coding a few years down the pike because people will just be able to purchase whatever it is they need. I don't know.
I think it's a balance. We often, when if you hear people who are proselytizing really heavily, and I think this technology is going to be really impressive and have significant impact. But when people pitch this, they actually forget that that there are other actors in the market who might respond to whatever else is going on. And I do think that right now, if you're a large company, you do want to be building as much as you can because what you can buy isn't isn't right for the market. I mean, it took, if you think about being, Henry Ford, and you're putting together the Highland Park plant, you can't go to a supply chain and buy something because nobody was thinking in those terms. And I think we are slightly at that stage for large corporates now. Whether we'll be there in 5 years, I don't know. And I think that one thing that we have to really think about is, how does, where will the value actually reside between having your own capabilities to design software for your processes and handing that over to another company who's designing software for 100 businesses like yours? And historically, it's made more sense to hand it over to another company, but it may just be that the cost curves have changed sufficiently that you'd rather have the nuance and the control and do whatever vibe coding becomes in 2030.
Okay. Yeah, that's, I mean, then count, countering my own kind of view, I do know that on some things that I know about, like healthcare software, organizations like the VA that built their own have done much better than the ones who tried to buy it from Microsoft. So yeah, it might be, that might be a story that makes sense. Actually, since we're talking about going for the model of models versus something much more specific, how should I think about the Chinese and all of this stuff? Chinese versus the big US AI firms.
I've just spent 8 days in China, and I was really fortunate. I got to speak to developers and engineers and management from about a dozen of the Chinese labs, and in many cases they hosted us in their offices. The main thing the Chinese say about the US, the Chinese have to say about the US, is that Claude code is brilliant, and Claude is the best model that is out there, and they really couldn't get enough of it. The term is they're Claude pilled. They talk about the constraints on getting access to compute, but
Right.
just in a way that's a fact of life. I mean, there's no sort of commentary on it other than it's hard, and they have to figure out how to get around that. And how do you build a culture of efficiency when you don't have as much compute? And I think they've built a culture of efficiency really, really well. I think it's going to help them in over the longer term. They don't really talk about a competition with US labs the way the US talks about competition with China. They do see themselves competing with each other. And as you know, that's what China, that's what the Chinese economy is. It's mayors in different cities who almost act as venture capitalists who compete tooth and nail with each other to become the electric vehicle hub or the solar hub or the AI hub of the nation. And what I would say is the models are really, really capable. They're very, very efficient, which is why they're so cheap to run. Which makes them very competitive for a whole range of tasks. But at the margin, it's instructive to note that everyone was using Claude for coding, as opposed to
Okay.
the cheaper Chinese version.
That's interesting. But so, I mean, you can imagine a future maybe where a lot of businesses are actually using these less comprehensive but much cheaper models, but that would that's I think what I'm gathering from you and from other people is that a lot of entrepreneurs in the U.S. are still dreaming of the Uber model
Mm-hmm.
that solves all problems, but that probably is not going to be, as God knows, but probably not going to be the way it all goes. That in the end, we're going to end up with a lot of specialized models, but also the Uber models will still have a role.
Yeah, it never made sense to me that you'd have a single model that would do everything, because the single model is, if it's going to solve the Riemann hypothesis, it's going to require a lot of resources. And if all you need to do is get it to route a bill to the finance department, it seems a bit silly to ask Einstein to come and do that for you. And we've had segmentation of markets for a long time, and it's like airlines. That's why not every seat in an airline is first class. Some passengers don't want it, don't need it, won't want to pay for it. So I do think that the ecology looks like a whole array of much, much cheaper models that are serving by volume lots of corporate needs, and then having more sophisticated, complex models for the more complex tasks. And that you're already, I think, starting to see. I don't see it, by the way, as a shock to the industry. I think this is what happens as an industry matures. You start with one size fits all, then you start to segment your customer needs, and you start to serve them in the most profitable way you possibly can. And that just feels to me like the way that markets have matured as in the past.
Okay, let's move to kind of more macro considerations. So from the beginning, in all of the couple of years of history that we have here so far, people have worried about bubble.
Hmm.
And a lot of us, sadly, a lot of us still remember the 90s quite vividly and think about all of that. But you've been doing a lot you've been trying to sort of do a set of criteria that you can use. And you've been pretty, I think, not dogmatically, but you just aren't seeing the bubble. You want to talk about that?
I do. I don't want to remember what it was like in the 90s. I lived through that one, and also the housing bubble, which frankly was far worse and much more terrifying. The I have a really simple mantra here, which is that honest customer revenues tend to be the engine that get you through this, right? What caused the problems with the US railroads in the 1870s and 1880s was that the revenues didn't materialize because the tracks were being laid in places where there were no towns. And that's a problem. The same was true in the .com. Paul, my team and I realized last year that it's very hard to get good quality data on how much was actually being spent by American businesses and consumers on AI. So we've spent several months building systems and gathering data to give a deduplicated view of what that number is. And that number is, at the moment, just to give you a sneak preview, is $150 billion per annum annualized at the end of May 2026, and about $90 billion in the previous 12 months. So up to, from May 25 to May 26. So you can see that it's growing, and those are deduplicated numbers. So if you spend $1 with OpenAI and they have to pay Microsoft 60 cents to run the servers, that we only count that as $1. We don't count it as, $1.60. And that's both a large number. It's a much faster revenue growth rate than mobile or the internet. It's also a small number because the US is a $32 trillion economy. And I think the thing is that at that level of spend, you are able to roughly cover the depreciation on the enormous capital expenditures that have gone into AI roughly this year. But, next year or the year after, you have to double your revenues again and again in order to cover these increasing commitments. And the thing that often unpicks the bubble, a bubble, is when financing starts to get a bit smelly. So that was clearly the case in the global financial crisis, where you had all of these synthetic collateralized obligations that were magnifying the risk on subprime mortgages. It was all smelly finance. And in the .com bubble, the .coms themselves didn't really have much smell about them. They had a lot of disbelief, but telecoms clearly had those sort of bad relationships between sort of internal revenue generation. So the other thing that we look at is how bad, poor, or strong or robust is the funding quality. And that funding quality measure is definitely getting worse. It's worse now than it was 9 months ago, but it doesn't seem from the numbers to be at the level that it has been historically when these things have imploded. And nor does it seem to be the type of exposure that is really systemic, which is what we saw in the the global financial crisis. There are companies like Oracle and CoreWeave whose debt looks very, very risky, and it's harder and harder for them perhaps to raise money, although Oracle just did. But it doesn't feel like it's systemic. When the global financial crisis popped, no one knew who was in trouble, whereas now you'd be able to isolate it with a single company or a single firm. So at the moment, we feel that this is still a demand-led boom, that funding quality has definitely got worse, but not so bad that I would say that there is an imminent problem on the horizon.
You may know this number, and I don't, but I mean, we're at this point, you're saying that basically sort of non-duplicated, sort of roughly speaking, final demand for this stuff is about 0.5% of GDP. And what share are sort of AI related stocks in market value? It has to be substantially larger than that.
They're about 40% right now of the S&P 500.
So that's a kind of a huge mismatch there. I mean, profits, revenue is not the same as profits here, but you really are talking about what is still, as you're saying, although rapidly growing, still a relatively small business relative to this immense economy, and which is kind of dominating the financial markets. That would be at least a possible source of alarm, although maybe okay.
Hmm. But just let's just dig into that a little bit, because of course, a stock price is really a reflection of the expected future value of that stock across, aggregated across the market. And at that 40%, it feels very high. But if you do it by the measure of earnings, these companies actually have a much higher proportion of earnings and earnings growth. So that starts to feel a little bit cheaper. And if you look at the US stock market in 1900, so after the railway calamities of the 1850s, 1870s, and 1880s, the railroad stocks were 60% of the capitalization of the U.S. market, and we had worked our way through the busts by that point. I think that there's a fantastic piece of academic work by an American finance professor called Bessembinder, and I forget his first name.
Okay.
But Bessembinder looked at the stock returns of 23,000 US stocks from the 1900s through to 2022. And those returns are highly, highly concentrated in, roughly speaking, if I remember the numbers correctly, about 2/3 are concentrated in about 30 companies. And if you look at those 30 companies, those companies are oil companies, electricity companies, or car companies. So these are the general purpose technologies at the start of the 20th century, or they're the IT companies. So the Apples and the Nvidias and so on. And the only exceptions in there were Walmart, a couple of the healthcare businesses like Pfizer and one other, and I believe JP Morgan. So you see historically that you will get this concentration, and especially when you have a new general purpose technology, to a number of winners, and that is I think is showing up in what we've seen today. So I don't feel we're overly concentrated from the perspective of risk, because you do want to be able to diversify a bit more than that. But the price does not feel like it's totally out of whack, and it's certainly nowhere compared to where we were during the .com.
Okay. The one last devil's advocate question on all of this. Again, I have no idea whether this is it's probably a totally unfair thing, but I keep on thinking that I keep on thinking of the California gold rush, and that if you had looked at the revenue spending on essentially gold rush related businesses as a whole, it probably looked pretty solid, pretty sound. It was probably quite a lot of money, but the trouble is it wasn't the gold, it was the picks and shovels and blue jeans and whiskey and women basically were
Right.
revenue streams. And are we looking at is that a fair question to ask about AI right now?
I think it's a really great question to ask. And the question is, what is the determinant of that demand, that $150 billion annualized, $90 billion of the last 12 months. And, what we see is that more and more American companies, I think it's about just under 30% of the S&P 500, according to our data, have in their earnings calls pointed to a generative AI project with a quantifiable, measurable result. And that's up from, nothing a few years ago.
Right.
Now, how do we interpret that? They're all under pressure to say they do this. So maybe that's what's going on. But when I go off and talk to executives, and I just came back from New York, I spoke to executives in about 30 finance businesses. They all said they plan to spend more next year. They all, and even though not a single one of them could point to even a 10 basis point improvement in their business from the investments they've made so far. So when we break out that $90 billion and say 2/3 of it's in the US, so $60 billion, again, that's a lot of money if it's a single company, but when it's spread across Main Street and Wall Street and thousands of firms, it's still at the experimental stage. And then what we should be thinking about is, are these executives learning by doing? Are they getting better? Are they going to make bigger commitments? And, the messages I get vary from those who have had some success, saying we're having success in the tens of millions, we want to figure out how to get to the hundreds of millions, to those who are finding it harder but are still persisting. So I think that we're slightly beyond pure picks and shovels right now, but still we're far from the point. I think in Paul David's work, it was 50% of American companies getting electrified when you see the productivity rise. We're just a long way from that.
I can't resist. I just before we had this conversation, headlines flashing across, but I saw something about a KPMG study that involved. Have you seen this? Had case studies which turned out to have been about the usefulness of AI that turned out to have been AI hallucinations. It's
It's
just
absolutely brilliant. Yeah, it's
wonderful thing. But
can I throw out the one thing that I do think is quite challenging here, which is we've talked a lot of the market has talked a lot about the bottlenecks because. And we saw this in railroads, right? The US couldn't make enough steel. We did Bessemer's collective invention where they all compiled their patents together to move the know-how forward. But there are these bottlenecks and there's a lot of emphasis on power and can you get the electricity to the system? And I think it's fair to say from our data, we think there's more demand than there is supply capacity right now for AI. But there is starting to be a question of whether there's enough capital in the market to do all of this. And we may see another few $1 trillion of intention from AI companies and technology companies to build out infrastructure to 2030. And it's starting to rival the new issuance of the US Treasury, which is $2 trillion a year. And I'm not I'm trying to, you may have more insight than me. I'm trying to talk to people who understand this a bit more to say, is this actually capital constraint going to start to be an issue, or is this just something that the market knows how to clear? But I'm puzzling about that at the moment.
yeah, I mean, one thing that ordinarily, we'd expect to see that in prices, and maybe we are to some extent. Real interest rates are certainly well off their very low point of pre-COVID. And there's lots of, and there's so much dust in the air in between. But now looking at them, they're higher. They're still substantially lower than they were at the peak of the '90s tech boom. We kind of
Mm-hmm.
real interest rates were around 4% then, and they're more like 2, I guess now, which is high by what we've become accustomed to, but not. And I'm not sure that this is, in a way, it's kind of surprising given the AI boom and the fact that now we have massive budget deficits that rates aren't even higher than they are. So it's kind of a puzzle. Whether this is an actual constraint, I think one question is that this is not, what can we say? NVIDIA is not the U.S. Treasury in the end. I mean, they need somewhat risk tolerant capital, the kinds of capital. Capital is not totally fungible, and the possibility that these guys may not be able to raise enough money is something we need to think about.
Well, although on that NVIDIA point, I did see that CDS, credit default swaps on 5-year NVIDIA bonds, so that's the cost of insurance against the bond defaulting, currently lower than US Treasuries.
I saw that, and I have to say that strikes me as being completely crazy. I mean, if you think the U.S. government is not reliable, then you shouldn't be investing in chip stocks. You should be investing in canned goods in your bomb shelter. I mean, this is crazy. But anyway,
are you telling me that markets aren't perfectly rational, Paul?
Good heavens! Yeah, no, I can't say that. That would be they take away my economist card. That's kind of I actually just let me. Actually, quick in passing, since this is, as it happens, we're recording this on SpaceX Day. One thing I've been wondering about is if there are sort of limited pools of capital for what are perceived as cutting edge investments. I do wonder whether, in some sense, Elon Musk is diverting a lot of capital that AI might need. I mean, he's got what everybody tells me is a crud AI product in Grok, and yet a whole lot of sort of the meme money is pouring into SpaceX right now. Is that something I should actually be thinking?
Well, I think what Musk showed was his willingness to adapt. So the AI product is now being subsidiarized against using his AI capacity to serve customers like Anthropic. I think he has this incredible following, but he does have something else. I've talked to people who have worked with him in the past, and they say that his ability to relentlessly focus on one thing and demand it gets optimized is really the piece that sets him apart. His first principles thinking that has him being able to bring down the cost of space launch faster than anyone on in history, and you have to change the Wright's law learning curve for an industry when Elon Musk gets involved, because he pushes the rate of learning so aggressively. And I think for all the challenges and his sort of mercurial behavior elsewhere, that's generally, I think, quite a good thing, because the thing that technology has done is it's brought down the cost of inputs into the economy. I mean, it's brought them down significantly, all over the place, and that's generally it's a good thing if we can apply that more productively in the future. And just thinking about what's happening in space, we're going to be much, much further ahead of what we can do in space than we would have been if SpaceX had not been successful over the past decade. It raises all sorts of other questions about how do we now govern what used to be this commons in a reasonable way. But there is a definite benefit that we've come down that learning curve so quickly.
Okay, that's fair enough. And I have to say that the one time looking at Musk's activities, I said, oh, he's really onto something, was when I realized that he had diagnosed what is the cost of space launches. And it's really not the fuel. It's really the rocket, and recovering the rocket makes all the difference. So that is kind of a real insight, and being able to make it happen is a real thing. Productivity. And that's, so it's a funny thing, right? This is all moving so fast that we don't have time for the kinds of, where's the technology in the official productivity numbers issues that we had in the past. But it's feeling like there's a kind of a solo moment where people are saying, okay, we're doing all this stuff. It all seems very impressive, but I don't see it in the numbers. But you want to talk about that? Because you were already alluding to some of that already.
Yeah, I mean, it comes up all the time. I wonder if we're all a little bit tick-tocked and we need things to happen much more quickly than we used to in the past. We aren't seeing it, as far as I can tell, in the numbers. Eric Brynjolfsson, who is probably a colleague of yours over at Stanford, says that he does think it's showing up in the aggregate productivity numbers. I mean, the way that I look at this is that, how quickly should we expect a technology like this to show up in any kind of number? And if we're at $90 billion a year, 60 billion in the US, as you say, that's not much of US GDP. It's also those early stages where companies are learning and they don't know what to do. The first 100 million of the 10 billion you might spend on AI is all about learning, and we're in that mistake making phase more than anything else. I do think that the mode that Paul David and William Devine talked about in electricity is really helpful. The idea of lighting through to what's called the group drive through to unit drive, where effectively what you're doing in those first phases is you're retrofitting all of your tangible and intangible capital stock and processes and people with the new technology that is electricity. But it's not until you depreciate that existing capital stock, you're willing to change your processes, that you get to the unit drive, which is what Ford has in Highland Park, that you really see the productivity benefits. But if I may, I'd like to just bring some kind of a few numbers to that.
Yeah.
Yeah. So, what would we expect to see in a company that has achieved the Ford equivalent of the Highland Park in terms of output, right? We'd expect to see something. And one thing that I thought we might see is what would happen in an AI native firm to revenues per employee, and how would it compare to other companies? So if you look at across, some quite high end companies like McKinsey, which is a strategy consultancy, has about $400,000 revenue per employee. If you look at Meta or Google, it's about $2.5 million revenue per employee. When you start to look at some of the AI native firms like Mercor, which does data generation, that number is closer to $7 million per employee. And if you look at Anthropic, it's close to $10 million per employee of revenue. And so you do have that thing that you would expect to see if someone has been able to be AI native, which is that the enormous commercial productivity of a single employee can be measured. But we're talking about a handful of firms at this point. But I do think that there is a slight shape that we're able to pick up, that this isn't impossible. It may be hard, it may take time, but it's possible.
Okay. Do you happen to know what would those numbers look like per dollar of invested capital? Because one of the big worries is that this is an enormously capital-intensive business that replaces labor, and you could get, I mean, I have no idea, but not too far from me are the giant oil refineries of New Jersey. And I presume that they have, not on that level, but they have enormous revenue per employee because there's no workers there. There's just these monstrous capital installations. So is that a
Yeah, I mean, Anthropic is. I actually don't have the number here on the top of my head, but it's raised in the tens of billions rather than hundreds of billions,
right?
and it had a profitable quarter, which is surprising and
That
a
is
bit of
right.
ahead of schedule. The what we don't know, and we've done a lot of forensic accounting to sort of peel apart the P&L and the balance sheet of these private companies, but the IPO will tell us, and they're going to IPO in the next 6 to 9 months, is how much of that capital is being put into the development of the next model versus, the 90 billion is obviously being monetized across previous generations of the model. And we know that we know that you can be much more efficient because the Chinese companies are using much less capital to build models that are nearly, as good as well. So I think the harder part of your question is that if every model that OpenAI or Anthropic costs 10 times as much to deploy and develop, but lasts only a couple of years before it's defunct because of competition, what needs to be true for that to be sustainable for more than a year or two? I mean, it's just that to me is a really tricky question as well.
You had some numbers on, or have cited some numbers that are also sort of like intermediate measures rather than actually looking at revenue. We look at, on the one hand, lines of code generated and then which has exploded, and then sort of actual usable applications, which has not. Is that telling us anything?
Well, the lines of code generated is I don't know what kind of measure that is really. I
Yeah.
mean, normally a line of code is something we can ascribe some value to because a human's written it, and now the machines let you write so much more. And it's unsurprising that the dramatic increase in lines of code has not been met by a proportional output in the number of applications or productivity. And the reason is that we've made it much cheaper for people to write code. So people who are less good, who are less determined, are now writing code, and you're getting this stuff out there. But I think that in absolute terms, are we getting more high quality code? The data seems to suggest that we're getting more high quality code, but there's also a lot of useless code that is effectively waste. But I would say, Paul, this isn't the first time that we have seen a useful input in the economy generate lots of waste. And I just think about our friendly barrel of oil. So we measure the value of that entire barrel of oil. The whole value goes into our GDP number, and then we throw away 2/3 of it through waste heat. And actually, it's only the 1/3 that goes into useful energy services. So that, I think there's an analogy to think about lines of sloppy code or slop lines of code, which is, well, we're used to having these processes that involve waste, and we were absolutely happy for more than a century to do that with barrels of oil.
Right. Yeah, I'd say a weird analogy is that I still remember when widespread word processing came in, and one of the things I noticed was that books started getting longer. That you could just see that it was so easy for authors now to churn out hundreds and hundreds of pages, and and what might have been 2-volume series became five. It's really, yeah,
Yeah. But, on that front, I think we also have to, consider, I think we're at an enlightenment moment here. So
right,
let's, cast our minds back to, France in the mid 18th century. And that battle was between who gets to write, who gets to create the truth, who gets to express their story. And of course, we can go back to those books in the 18th century, and they are absolutely remarkable. And how these men and women produced works like that with quill pen and
right.
encapsulated a world that was just seedlings, as a little seedling. It amazes me. But is it worse off that we're able to allow for lots more expression? And I think it's very, very clear that there are places where we are worse off. So we are, worse off when that gets connected to a algorithmic recommendation system that just drives sort of slop at us constantly. But I'm not sure we're necessarily and inevitably worse off, because what we're doing is we are giving access to lots and lots of people. And I just think about, Ramunajan, if he hadn't been discovered from his obscurity and got to England, what would we have lost if that accident hadn't happened? And I do feel sometimes with these technologies that we need to step back and say, right, there are problems. Let's deal with the algorithmic slop. Let's deal with all the AI writing that is infesting the world right now in particular ways. But let's also recognize that in reducing these costs of access, we might find amazing people. In breaking down the silos of knowledge between disciplines, we might find connections. Maybe there's something in battery chemistry that turns out to be really good in cardiology. Well, it sounds absurd to say that, but we don't know because we've never been able to get those experts to talk. So when I look at this question, I try to, break it apart into and look at each of those opportunities more discreetly.
Okay, I think there's a potential book here, something like The Upside of Slop, but that it's
We
real. I
could
mean,
get Chat GPT to write it.
oh gosh, yeah, I think we could go on forever, but I mean, it's incredible. I mean, as we say, I mean, this is an unrecognizable scene from 18 months ago when we last talked. So this is, wow. I feel, I started my career writing papers, longhand, alternate lines on yellow legal pads. And here we are. Amazing, amazing change. Not sure it's all for the good, but thank you so much for talking to me. And we'll just keep this conversation going until AI starts doing the conversation for us.
Paul, it won't do the conversation for us. And longhand, I write everything with a fountain pen. I
Good
burn
heavens.
through ink. I've got my ink here, and I'm writing my new book. Every chapter is written longhand, and most of my research is, and it's with a fountain pen, and the computer's turned off because the AI does all this boring computer stuff like PowerPoint and emails for me, and I now have time to apply my brain and my pen and my paper to the things that I want to think about. So I'd be really happy to continue this conversation in a few months. But thank you for inviting me.
Thanks so much. Take care then.
Cheers.